Hey everyone, it's Ron Toy with the Ron Toy team at Cross Country Mortgage. Wanted to bring you my live market update and recap for the week, what happened with the markets, and go from there. This is the chart. This was actually done a little bit earlier today. We finished the day up 29 basis points for the bond market price to be at 100.92. The higher that number, the lower the rates. So this is great information to have. Make sure you're educating a fully informed consumer, because nothing's worse than being told by somebody that this is the time to refinance or whatever and missing out on other opportunities. So wanted to make sure I let everybody know what's going on. It's Friday. I'm done for the day, relaxing, and wanted to bring you some information and answer any questions that anybody might have about the bond market. But yeah, so let me move my head, walk you through this so that you understand what you're looking at. And don't forget, I upload these to my YouTube if you end up joining a little late, because these are educational. I do this as a loan officer here in Texas to help empower people to make a buying or refinancing decision. You don't have to use me. You can use anybody. This is education. If you're a realtor or a mortgage loan officer, this is great information to share with your clients. So let me move my head out the way and show you. Okay, so what you're seeing there is the bond markets over the last few months. And right now we're up 27. Well, we finished the day up 29 basis points. But that means rates are coming down. We had the Powell speak today, letting everybody know that they need to change the economic policy, meaning they're going to cut the Fed fund rate in September on the 18th. This is great, important. We also had some additional information come out that I'm going to share that is about housing data. So let me show you. Pulling that up now. All righty. So here is some current housing data. Why this is important is to show you inventory for new homes. There was a ton of them that ended up not getting rebuilt. And so what's been completed was 102,000. That is it. It's sad. 2.2 month supply. It's insane. And so this is why home prices continue to go up, because there's not enough inventory. And there's good policy in place that's coming that is designed to try to get at least another 3 million homes built. That will help slow the rate of home price appreciation. And I've shared this slide, and I'm going to try to do it again just so people have it if they haven't joined my lives earlier in the week or before, where they've seen the home price appreciation data since 1942. This is huge. So let me move out the way so you can screenshot this. And think about how many wars, recessions, gas shortages, drama that's gone on in our nation since 1942. 2023 home prices appreciated 5 to 7%. Now, in 2007, it was scary. We over leveraged and we built way more than demand required, and the mortgage guidelines were trash. So we'll never see that again. And this is what's important to be out here sharing this, because there's people on there online saying there's going to be home price crash and there's going to drop by 15%. Only one time did home price ever drop by more than 10%, and that was in 2008. But again, we're not in the same climate. We don't have enough homes. We don't have enough inventory. So this is why we're in a different market. And I want to share it because there's not enough people out here giving you honest information. There are some great loan officers that are on this app. Cat Loans. You can go follow her. Carlos Munoz. He's on here. He's great. But we're here to make sure people are taken care of. And I want to share, answer questions. If you're just joining the live, I'm Ron Toy with the Ron Toy team, Cross Country Mortgage. I'm here to help people get the financing they need to invest in residential real estate and answer questions and empower people along the way. If you have questions, put it in the comments. I'm happy to answer them and go from there. But yeah, it's a great week. Next week's going to be important. PCE's coming out. And then in September, as we get closer to September, when we have the jobs data that's going to be coming out, the Fed fund rate decision, as we're getting in and closer to the end in the fourth quarter of the year, election season, which if you go back and look at my posts and stuff since the late parts of last year, I'm like, hey, this is when the rates are going to start coming down. Watch. And exactly like I said, over and over and over, we're seeing that response, which is great. Home prices, they're solid, they're stable, but the interest rate really impacts people. And that's something that's held a lot of people back from buying. And I want to show you hope, because there's a lot of people out here that are going to talk doom and gloom. There's things that are going well, and it's a great time to buy. It's a great time to refi if you can get into what you can comfortably afford. Don't pay way more than you need. That's dumb. And that's an antiquated way of thinking. Buy what you can comfortably afford. If you're in a 1 or 2 bedroom condo, instead of renting for the next 2 to 3 years, buy the 2 to 3, 1 to 2 bedroom condo, build equity, and then use that as a rental property for passive income, or sell it. But then you've at least built equity. And that's kind of what I want to make sure that people understand. And also be here to answer questions. It's been great. This week was awesome. We've seen since the beginning of July, I'm at the beginning of July to now over 250 basis point improvement in the market. This is awesome. The average interest rate now is down in the sixes where it was near 8% not too long ago. That's a huge savings. And so when people are talking about affordability, let me pull that up because a lot of people are sharing it. It's great info. So let me pull that up for everybody. Let me see. Here it is. So this is right here for an example. If you have a $400,000 loan amount, what the payment will be just for principal and interest at different rate points. And as you can see, if you go from a 7 to a 6, a full point drop in rate, you're talking $263 a month. That's a significant amount of savings. And so if you've been waiting to get in, this might be a time. And think about this. If you find the right property with your realtor, they can help negotiate a seller buy down, a temporary buy down, and help get the rate even lower. They do a 3-2-1, which is 3% lower for the first year, 2% lower the second, 1% the third. That means you could have a rate right now of 3% in the threes. So you don't have to use me. Take this information, bring it to your current loan officer, your current realtor, and fact check me, double check it. Hey, I saw a guy on TikTok that was saying this stuff. Is he telling the truth? And go from there. Again, I want to make sure you're an empowered, informed consumer and not just somebody getting jacked around by CNN, who is owned by the companies buying up all the inventory, which is then reducing our supply, increasing prices. It's just crazy. Let me get this off the screen. Let's see. Background. There we go. So yeah, if you have questions, put in the comments. Again, I'm going to repeat myself just in case for all the people that have joined. Thank you, everyone who's joined. If you have questions, put in the comments. What are you seeing in your market? I'm here in Dallas, Texas. And so it might be a little bit different for where you're at. What are you guys seeing? What are some of your fears? Are you renting? How much are you paying in rent? I'd love to get some feedback from the comments and go from there. It's interesting because one of my friends, she's a loan officer and she goes live and there's always these interesting questions and comments. And I'm like, what is either wrong with some people or laughing my butt off? And so happy to go about that and talk about anything you really want to talk about. But I'm a mortgage loan officer. How many of you have ever talked to a mortgage loan officer outside of like maybe one conversation? So I'm also want to tell you about important questions to ask your loan officer when you're interviewing them. Because when you're shopping for a mortgage and shopping for rates, you want to make sure that you're aligning yourself with a professional that understands your current position and aligns with your current and long-term financial goals. Because this isn't just a transaction. You're buying one of the largest investments you'll make in your life and maybe do it 2 to 3 times. You want to make sure you're with the right guy or girl to do your loan. And so interview them, ask them questions. Like, here's a good question to ask a loan officer. When was the last time you personally purchased a house? When was the last time you personally sold a property? How many properties do you currently own? How long have you been doing this? How many families have you helped over the last 10 years, 5 years, or however long you're in the business? What got you in the business? Get to know them on a personal level before you start to go very much further, because again, you want to have a relationship with your loan officer who's going to make sure that they are taking care of you and align with your goals and plans. So ask questions to get to know them as a person and go from there. But because everybody, this is the reality. Almost everybody's rates are going to be close. We're going to be close within an eighth or a quarter point. And usually if you can, what we'll do is we'll ask you to get a loan estimate from your competitor, and then we can take it in and say, hey, look, this is what's going on. But loan officers aren't paid by the interest rate you chose. So there is no incentive for me to charge a higher rate or any of that stuff. The only difference when you're looking at a loan estimate between lenders is going to be Section A, which is the origination charge section. Are they charging a flat fee? That's another question you want to ask a loan officer. Do you charge a flat fee to originate the loan, or do you charge points? And if so, what are the points? Because the points to originate are not the same as discount points to buy your rate down. And because it's the same word sound, a lot of people get confused by that. And I don't want people to be confused. That question is so empowering when you're making a buying decision or a refinance decision, because I just talked to a client. That's why I was a little late to this live. I was supposed to be on the live at 6, but it took me a little while because I was on a client, because I've been getting people, because right now people are out here banging the phones about refis, and they call me and they're like, hey, Ron, I know you're going to shoot it straight. Here's what this guy's quoting me. Here's this. And they send me over the information. I'm like, this is embarrassing. Like, it's an email without a full breakdown, full loan estimate, and it's not breaking down the origination charge and points. And it was abysmal. And so I don't want people getting taken advantage of by hungry loan officers who didn't plan for this kind of market so that they could tell their client, hey, not right now, wait till after the 18th. But they're too hungry because we're 100% commission, so they have to take that commission. And I don't like that. I think that's wrong. And I want to empower you to make sure you're watching out for that. Because again, you don't have to use me. Know these questions to ask to make sure you're doing the right thing. Because if you refinance now, there's costs that get rolled into your loan, and it's going to say no out of pocket, which is true. But they need to make sure, because if this guy was going to look at possibly refinancing from like a 6.75 down to 5.875, which is a good drop in the interest rate. But after the 18th and the Fed drops the Fed fund rate, maybe he can get down into that, even lower. Maybe he gets down into the lower fives, maybe high fours with the same points he was going to pay, and could have saved himself that amount of money instead of pulling the trigger too early, because the loan officer was able to slap the hood of the house and say how much APR they could fit in. It would make it look cute, and the client's none the wiser. And that pisses me off, to be quite honest. And I don't want that to happen to anybody who follows me or ever interacts with my lives. If you've been inundated with calls, and if you're a homeowner about refinancing, this is where you have to look. You don't have to use me, like I said, but look on the loan estimate. If they haven't given you a loan estimate, they're being deceptive. But look at section A. That's the origination section. How much are they charging? Because you're gonna have to set up escrows and all that. How about 130,000 loan, 75-year salary, and a 600 credit? Yeah, you could do a loan like that, easy. Absolutely. If you want more info, I'll send you a total cost analysis without having to do app or any of that stuff. I'll just send you some numbers. But if you're making 75,000 salary, 130,000 loan amount, or purchase price, or loan, whatever you're suggesting, thank you for being responsible and not going above where you should be, or where people think they need to be. That's a very responsible loan amount. And 600 credit, that's fine too. But there's also, I can walk you through different steps, because if you end up using me or not, I still want you to have the information to help your credit score improve. Because obviously, the higher credit, the better. But like, you can still get a loan, and it's better to get the loan now and refinance later, because you're going to be building equity two ways. Forced savings through principal balance reduction, meaning every time you make your payment, you're reducing your principal balance, increasing your equity. The other is through appreciation. And I showed the home price appreciation data since 1942. It's one of the most stable investments you'll make, and it's why hedge fund companies and private equity are jumping ship and buying as much property as they can, especially now with with property management companies being able to do it at scale. They're not afraid to invest in these types of properties anymore, because they could buy up 30, 40% of the inventory, have people manage the properties for them. And now they have, if it's vacant, they get to write that vacancy off as a loss on their taxes. Really nice way to manipulate the books, where, hey, this market rent, this property's empty, but they're still getting appreciation, so they don't care. And they control the multifamily, so then they can really fluctuate everything and control it. It's scary, but it is what it is. That's why I want to be on here. But yes, you could definitely get a loan, depending on where you're at, that can impact like your escrow accounts, your property taxes, insurance, your age of your roof. So there's a little bit more info that I want to get from you in order to give you an honest answer with integrity, instead of just bullshit smoke up your butt. But yeah. But at that, right, your credit's okay. Your income should be there. Depending on your monthly debt obligations, that can be an impact too. But there's a plan you can put together to achieve all of that as well. But buy what you can comfortably afford now, because this is the cheapest homes are ever going to be. Yeah. Any other questions, go ahead and put in the comments. Market recap. The market's rebounded. We closed the day up 29 basis points, amazing. We've recovered like over 250 basis points since the beginning of July. It's huge. It's phenomenal. We've seen the average interest rate drop into the mid sixes where it was in the high sevens just at the beginning of July. And that is saving people tons of money. And I'm excited for it. But I also know that when these kinds of movements in the market happen, this is the creepy part that nobody talks about. I don't do this, but there are companies out there. Hey, how's it going, Venus? There are companies out there that buy data that's public information from like Equifax, TransUnion, all this stuff. And they know where your equity is because you can also aggregate that data. Who bought homes in this amount of time period? What was their, what's their estimated loan amount? And then they'll mass market you. That's why you need to go to optoutprescreen.com and opt out of this stuff because it's disgusting. But there's so many people getting flyers. And this is the other part that's really nefarious, is the flyer will kind of make it look like the servicer you're with. And then you look at the fine print, not associated with your current servicer. I called one and I lit them up. I was like, don't you ever mail my client something again. And I'm reporting you to the CFPB because it was such BS, absolute trash marketing. And they were even texting my client. I showed the text messages with my sister the other day because it was my sister's file. She was pissed. She's like, I'm filing a complaint too because they were trying to show payment without all the other things, which is a violation of lending guidelines. And when she brought that up, they're like, you must have too much time on your hands. It's literally in a text message. And I'm like, what an a-hole. It blows my mind. But that's the thing. Right now, people are hungry because if people didn't do a good enough job setting up relationships with realtors, they probably haven't closed enough business to keep them, consistently earning. And so now they're going to be sending out stuff to try to get every little deal they can that might not be in their client's best interest. And it's sad. You're helping so many people with your knowledge and experience. Thank you. And that's what I'm here for. Like I'm not a big fan of social media. I'm not great with technology, but I started seeing stuff popping up that was misleading people. I'm like, no, I'm done. I'm going to stand in the gap and make sure people don't get screwed because they're being lied to. And when you know that 5 companies own everything, seeds for farmers, the banks, properties, and they have intentions to buy 30 to 40% of the inventory of homes, and they own the media companies that are saying, oh, home prices are going to drop and this is going to happen and this is going to happen. And it's bullshit. I got to stand in there and tell people and show them the numbers, show them the data. Because if it was a bad investment, why would hedge fund companies be spending billions every year buying up inventory? And this is the behind the scenes stuff that you have to look at when you're thinking about investing in a property. It's called cash on cash return. When you take money and you invest, say you buy 10,000, for simple math, with $10,000, you buy 10,000 shares and it gets 10% rate of return in that year. That means you made $1,000 that year. Great. We want 10% rate of return. Index funds over the last 30 years have averaged about 10+% return. This is great. But with your property, if you take that same 10,000 and bought a $300,000 house and that property went up 10%, that home is now worth $330,000. So off your 10,000 cash investment, you've made 30,000. That's a 300% rate of return. That's why these hedge fund companies are going in and doing it. Let's say on that same 300,000, they have to put 20% down as an investment property. So they have to come out of pocket 60 grand for the down payment. Let's just say it. So if it goes up $30,000 that year, they still made 50% return. You don't see this in stable markets in the stock market with this many consistent returns. And I shared the home price appreciation data since 1942. This is so important. Get this information out. Again, you do not have to use me. I'm literally telling you this to inform you as a consumer so you can take this information and check it with the people in your life that you know, like, and trust. I'm here to help you if you want, but don't feel like I'm out here trying to get you to contact me specifically. I'm here to educate you. You want to contact me? Cool. But take this and let it be the springboard for you to start having these conversations. Because I shared this out with my live the other day. I am 41. I am a time traveler to a 20-year-old because I've lived that 20 years from where they are to where I'm at right now. If I could go back to my 20-year-old self, who had a decent job, done with high school, wasn't in college yet because I was an idiot. And actually, not everybody needs to go to college, but that's a side quest. At 20, if I would have bought what I would do if I could go back is buy a fourplex, put the minimum amount down, live in one side. When we talk about investments, we talk about doors and sides. So doors, that's 4 doors off of your first purchase, and you can use down payment assistance, closing cost assistance, and get into one for so inexpensive out of pocket. Live in one side for 12 months to 24 months, then go buy another fourplex as a primary residence, putting minimum amount down. So now in a 12 to 24 month period, you own 8 doors. Do that again every freaking 12 to 24 months until I was 30 years old. And by that time period, maybe I got 10 fourplex. So I have 40 doors under management. And in that time period, those properties would have appreciated. I would have lived in them, and I would have built an empire that would have been amazing and never had to put 20% down. You don't have to put 20% down to get into property. And that's the other part. In school, we're taught a squared plus b squared equals c squared and dumb shit that we'll never use. It's good that we know it. But how many of us were ever taught the true functions and process of buying a property, what it looks like, and what the impacts of equity it does? Because 2/3 of the wealth we have in our country is tied to the equity we have in our homes. Right now, there's more equity in homes than there's ever been in our history. There's average equity position is over 60%. That means we have a ton of money that's trapped in homes, which is good. But that also terrifies the power structure, because when you have equity, when you have money, you have power. And when people are sitting on hundreds and hundreds and hundreds of thousands of dollars, and if they wanted to extract that, pay off debts, now if you're not in debt anymore and you don't get back in debt, because that's the other part. Some people will refinance to pay off debt, but then not do the things to make sure they don't get back into debt. So then they're double screwed, because now their house has rolled the cost into their home and they get credit card debt again. And it's a cycle. Don't do that. But if you pay off all your debt and you have freed up capital to invest, now you're no longer a debt servicing person. You are now proactively investing, and you're building your long-term generational wealth. If you've got credit cards at 28, 26, and 18%, which right now we have the most credit card debt we have had in our country in a long time, it's over $1 trillion. People are living beyond their means, because the old way of keeping up with the Joneses used to be marketed to us and bound back in our brains that we have to keep buying. We got to keep nicer, stupid shit that we don't need. Buy what you can comfortably afford, and you leverage that equity position to change your life. I talked about this on my last live. I had a client who contacted me to want to do a cash out refinance to get 26 grand out to pay off debt. But they weren't happy in their home and were thinking about selling in the next 12 to 24 months. And I said, Steph, don't do that. Sell your house, use the equity, because you can get all of your equity out, because when on refi, you can only go up to 80% loan to value. So I said, sell your house, pay off all your debts, use 20 grand to get in your new house, and you'll still have $20,000 left over to sit into a debt servicing account, to where now, because your debts are paid off, that account pays for your groceries, your gas, your mortgage. And once a quarter, you make a line item move to keep that account full, because you don't have any more debts. You have 20 grand sitting in the bank. So everything you make and your weekly and monthly income is going into high yield savings and investments. And then you're just keeping your debt servicing account full by moving some money over every quarter, because you can afford to do that when you don't have debts. Stop. That's the part where I want to help people get out of the idea of being a debt servicing type mindset. You don't need debt. When you get a raise, you don't have to get a debt unless it's something that's going to pay you a return, like buying other properties. Some people are business owners, right? And they have a hard time getting qualified depending on how they file their taxes. Ask your loan officer friends that you're connected to about a bank statement loan, because you take your tax write-offs. Don't try to manipulate your taxes trying to qualify for a mortgage when there's other opportunities out there that are easier. And it's better, so you don't overburden yourself with too much taxes just trying to qualify for a mortgage. That's wrong. Bank statement loans, what they do is they'll take the either 12 to 24 month period of your deposits and give you an average amount for your income. That's usually better for business owners. There's also an option called a DSCR loan. It's a debt servicing ratio option, where it's based on the debt serviceability of the property. There's so many options out there. I'm not the only guy that can do it. I'm just out here telling you so that you're empowered to make a buying or refinancing decision and go from there. Great loan officers to follow in this app. Cat Loans. She's phenomenal. Carlos Munoz. Miranda's on this app. If they end up coming to the comments, I'll try to see if I can pin them or do whatever. But interview your loan officers. Find out what they're passionate about. Why are they in the business? What are they here to do? What do they see for your future? Ask them, hey, I don't know the questions to ask because this is my first one. What question would you have asked when you first started if you didn't know anything? And let them fill in the gaps. Go from there, but find out what drives your loan officer. Are they going to be there for you when you get your property tax bill in October, or when your escrow account gets readjusted, and walk you through that process to help reduce your cortisol and help you bring back out of a fight or flight response and into a stable state management to where you can think and process rationally instead of react. And that's the other part. You got to make sure this is stressful. Buying a home and selling homes are the top 5 most stressful things a person does. You do it maybe 2 to 3 times their whole life. And if nobody's validating that stress and fear, then they're doing you a disservice. And it's okay to say, hey, I know this is stressful. I thank you so much for your time. I know you uploaded those documents. It means a lot to me. How hard is that? Instead of, hey, turn in your pay stubs. And then crickets. Like, screw you, loan officer. They're nervous. Why do they? But address that up front. Hey, I know that you got a lot going on. I need your pay stubs. What we're doing and looking for on your pay stubs is to see if you've got any variable pay that we can add or add to your income to make sure we max qualify you. If we do see variable pay, this is how we're going to look at it. So we make sure we utilize it. If it's either a 2-year average or 1-year average, but walk you through it so you understand. Your loan officer should be doing that. We're not here to just push button and get a mortgage. That is trash. You get no service. You get nothing. They're not going to walk you through it. Talk to somebody who cares. We'll walk you through this stuff. And again, I'm not the only guy out here. There's plenty of business to go around. I'm here to educate and empower you. These are some basic questions you want to ask your loan officers. Again, and if you have questions, put it in the comments. If you're a realtor, let me know what you're seeing in the market. If you are a lender, realtor, a person owning, talk about it. But if you're a realtor or a lender, one of the best things that I can advise you to do is go to therapy. And invest in your emotional intelligence. I wish I would have done it sooner, but for the last 11, 12 years, I've been on my emotional intelligence journey, and it's been pivotal because this business is stressful. And because we're dealing with the top 5 most stressful things that a person goes through, we're dealing with people in a constant state of emotional turmoil. And if we're not careful to protect and guard ourselves, we're going to take on this. And that's why in our business, there's a lot of people that are dependent on substances and alcohol to numb their feelings. And that is something that I want to help people move past so that they're empowered. Don't fall victim to that. Go to therapy, work on your emotional intelligence, work on your childhood trauma so that we can show up to our clients in our highest and best and not emote onto them and cause them to have even more stress. It's important. Also, getting a good coach. That's the best investment too. But you want to interview coaches to make sure you know the right one that's going to align with your current and long-term goals. There's great programs out there. Get a coach. That's someone that's going to help hold you accountable and push you to the next level. Professional athletes don't just do it based on hopes and dreams. They get coaching. They practice. They do the reps. They read. They invest. Go there. Do that. And clients, ask your realtor out here, people on the live, if you're talking to a lender or a realtor, ask them, are they coached? Ask them what they do to invest in their craft to make sure that they're always staying at the top of the business and the top of the industry so that they are communicating in a way that's empowering versus just reactionary based on what everyone else is talking about. Good loan officers out here are studying the markets. They know market trends. They know what's going on and can communicate that effectively. If they can't, no worries. They might just be a newer loan officer, a newer realtor. That doesn't mean they're not going to be great. And they're going to need clients and they're going to get it. But is that something you want to be a part of? Do you want to be a part of someone's growth? If you do, cool. That's where you want to ask and you want to communicate and be the person who chooses instead of the one who experiences some of the turmoil that you might get from a newer loan officer. That doesn't mean you shouldn't use a new loan officer because sometimes they need it. They're going to be aggressive, and that's great. Everyone starts as a new loan officer and works their way up. There's pros and cons to both. Sometimes when you work with a relatively new loan officer, because the truth of the matter is the loan officer is just a fraction of what makes the loan possible. It's the back end, processors are so important, and we love our processors because they're the ones doing the nitty gritty dirty stuff, getting the docs and putting it together and uploading it and all the wizard stuff. Our loan processors and underwriters. So the loan officer themselves, if they're passionate, that's going to be the part that's going to potentially be in your best interest, because they can ask their products department, hey, do we have DSCR? Great. Are they going to be there for you? Sometimes when you get a newer loan officer that doesn't have a bajillion clients, you might be able to get a little bit more hand holding and service that is what you want. That's why I don't want to knock it. Sometimes it's better, and that's okay. And more experienced loan officers, they might get pissy if they heard me saying that, but I don't care. If you get pissy about it, you're the problem. Do better, period. And that's the other part where I got on my live and I just tell it how it is. I don't really care about, how many followers I have or any of that stuff. I'm here to add value. And when I saw some loan officers getting pissy because they saw some of the recent updates from future Madam President Kamala Harris, when she said that she wants to build 3 million homes and give first-time homebuyers $25,000, I'm excited. That's helping regular people. Versus, and they're talking about it free money. I'm like, was it free money when we gave $100 billion in corporate subsidies last year, or was that just like what? And so it's like, don't get pissy when we're helping regular people, calling it not going to be the thing that's going to help, but staying absolutely silent when we spend $100 billion a year in subsidies for corporations who are bragging about record profits, like Walmart that just came out in their last quarter. They made like $8 or $7 billion in a freaking quarter. And it's like, they get subsidies, and those subsidies make it possible for them to underpay their employees. They're the biggest group of employees that are on social programs. And don't get mad at people on social programs, because go look it up. I challenge you to look up how much corporate subsidies are versus other social programs, and you're going to be sick. It's disgusting. Their record profits and laughing in our face, and nobody's out here telling you the truth because the freaking media is owned by the same companies making the record profits. It's disgusting. But the information is found, and nobody's telling you where. BLS.gov. You can look up CPI, PPI, PCE reports, home price appreciation data. BLS is the Bureau of Labor and Statistics. They don't want you to know that website exists, but hardly anybody ever goes in and reads those reports to see which industries are driving inflation. And when you go in and look at it and you start to see, man, why is inflation so high? What is this word that people are talking about? And then you start to see that some of the biggest impacts were used cars. I don't know if you remember back in 2022, 2023, the used car market got stupid. And then car insurance and homeowners insurance. But then you see their earnings report and you're like, wait a minute. You guys are posting record profits and then blaming all this other stuff for why you had to raise prices. If you had to raise prices, profit is after expenses, after everything. So why do you have to raise prices as much? If after all of these things that you blamed on why you have to raise prices, you still have an extra $7 billion, and we're going to simp for those idiots? No, not on my channel. So I want you to have money, build long-term generational wealth, so we can collectively work together to change a system that is designed to keep people down. And it is disgusting. And I see it. And it's when you get into the finance world, you see it very clear. And it is disgusting. For instance, in mortgage, gentrification, right? What is sad is those nanas and old people in those communities that end up getting over-policed and freaking worn down because you give permits and everything for liquor stores and pawn shops. Nothing against those types of businesses, but it is intentional because that property value goes to nothing because you've over-policed. It's high crime. But then all of a sudden, Cindy Lou Who with a Starbucks is going to come in and save the world and buy up all the property and turn it into like mini mansions. And now those homes that were worth 20, 50, 80,000 are now worth 600 grand. We're seeing in Dallas. Imagine if somebody would have went to Nana or went to the people in those homes and said, hey, what I want to show you is a way for you to invest in your property by getting some of your equity, doing the repairs and updates that you're seeing on these other homes so that you make the 500,000 versus some investor knocking on your door saying, hey, I'll pay you in cash right now, 35 grand for your house because they know it's paid off. Because you can find out which homes are owned without a mortgage. And sometimes you can do it just by data and how long they've owned the property, because it's all public information. And that's what these creepy people do, is they'll try to wait for someone to be in a vulnerable position, which pisses me off. And then they take advantage of them and nobody's out here telling them. In those neighborhoods that are getting gentrified, those people should be able to, especially if it's already started, the current homeowners can leverage those equity positions to increase their property value and make the money instead of some skeezy investor. And this stuff happens all over the world, all over the country, especially here in the United States. It's disgusting. Think about what's going on in Detroit, where all the plumbing is trash and all this other stuff. I have been telling everybody, like looking at the markets, I've been seeing homes over there you can get 5, 10,000. Yes, it needs work, but those homes used to be insane and high value. Watch what happens in the next 10 years. Guarantee somehow miraculously it'll get gentrified and it'll be back to where all those homes are $5 and $6 and $700,000, and the people that should have made the money are the ones that are going to be looking back at it and saying, why didn't anybody tell me? And I'm not in that area. Talk to a loan officer there. But there are construction loans, FHA 203K loans that can help you with the renovations. And you can do it all inside your mortgage. So say you found a house that's really inexpensive and you're like, you know what? I want to go about this. Talk to your loan officer about a renovation loan. We can all do them. There's also ground up construction called one-time close. That's why it's important to have a conversation. You might not know you're ready or realize where you're at, but a game plan, maybe it's 1 year, 2 year out. But if you have that conversation, you can start to get this going, because there's USDA construction loans where it's zero down, VA construction loans, zero down. You can build your own house. And so, like, I have a friend, we closed last month. Him and his son bought land off of an auction for $5,000. They had to clear up some title stuff, but $5,000. They spent $110,000 on the construction costs, and the property appraised for over $400,000. So in a little over a year, they accumulated $300,000 in equity because they got the land for inexpensive, which there's other land out there for the same cost. And the cost to build sometimes is $150, $110 per square, depending on the finish out. But if you don't know this, and to buy is $300 a square in your area, maybe it makes more sense to do a construction one-time close and work with a contractor, and you've made yourself instead of a box new home, you've got a custom home that is more in line with what will fit your needs. But if you don't know what's out there, then you're not going to take advantage of it, and then other people will, and you'll get left behind. And I don't want that for anybody who follows me. If you have questions, put it in the comments. But yes, this is meant to empower you to have conversations. You want to talk to me? Great. My stuff is in my profile. You can get my calendar appointments to talk, and we can walk you through it. But talk to somebody. Get on a plan. What's your goals? What's your dreams? How much do you need in passive income to quit your shit job so you can focus on something that you love? Maybe you're an artist. Maybe you're this. There's a plan. Get with somebody who's going to help you achieve that goal. Otherwise, it's just a wish, and it's never going to come to fruition. You have a dream, put the action steps in place to achieve that stuff. If you know you want to make $100,000 a year, great. What do you love to do? How much does it pay you? And how much are you going to need to do that over and over to make your goal? And then you start tracking it. And then eventually you'll see, the faster you track and put your stuff down on paper, you'll be surprised on how quick you get to your goal. It happens. That's why top successful people journal and write down their goals and adjust it. Because think about it. If you don't track your daily, weekly, monthly information, if you only review once a quarter, you only have 4 opportunities in a year to adjust and make adjustments to your game plan to make sure you're on track. But if you track it monthly, that's 12 opportunities to review what you're doing, to make sure that it's in line with your end state goal. And now you have 12. But imagine you do it weekly. Now you have 52 times that you have the opportunity to make adjustments. Daily, 365 times to do this. So that's where you want to make it in bite-sized, manageable, chunks, whatever your goal is. And that's where I'm like, don't overspend on your property to where you can't focus on some of these other things that's going to give you freedom. Because for a long time, I was like, I wanted all the shiny stuff and I didn't care. And I bought the dumb stuff and the expensive watches. And then eventually I was like, why? What is it feeling? And I'm like, I want to buy my time. I want to buy stuff that's going to allow me to spend the most amount of time doing the stuff I love to do. And because I'm watching my parents, their health go downhill, and my partner Monica's parents, what happened with them, I'm like, that's not going to be me. That ain't going to be me at 60, 70, 80 years old. I'm going to be in a totally different position. But I also don't want any of you to be in that position, because when you buy, you're building equity. You can use that equity to, pay off debts, invest, do all the things. It's important. But what's your escape plan? Because it's not just getting to a retirement age. Okay, what does it look like after that retirement age? And what is it going to take? Maybe for your dollars to stretch, maybe you don't need to wait as long. Maybe it's like, look at what you need. And maybe it's moving to Belize or moving to another country where your dollar stretches further. And maybe you're closer to where you're at, and go get you some freedom. Go get you some enjoyment in life. Go get you some time to do art, be creative, go make freaking birdhouses out of popsicle sticks. Whatever the shit that is what drives you, don't just write it off. Take that shit seriously, because life is too short and it goes by too fast. Whatever you love, put a game plan in place that's going to help you get there to do it way more. Because I would much rather spend the last 30, 40 years of my life doing absolute fun, crazy stuff, living on room service and traveling, than worrying about working and saving and doing all these things that is boring, but not putting a plan in place to ever get there. And that's the difference. Plans that are executed and reviewed as often as possible will make sure that you stay on track for your long-term goals and current. If you don't have a plan, what are you going to do? And also, sometimes with investors, you got to have a certain amount of money to invest before they'll even talk to you. Otherwise, you're dealing with an AI bot, and that's freaking bullshit. Talk to people that care. They're investors, loan officers, realtors out there that will help you get on track. Maybe you want to buy a freaking franchise. Most loan officers, myself included, we're a part of networking groups. Like, I'm in BNI, and I usually do a post on Thursdays about it. BNI is Business Networking International. I don't work for them. It's a networking group. But in our group, we have franchise consultants. We have business acquisition people that will help you buy businesses, buy franchises, sell your business. But if you don't know how much it is to buy a laundromat, and everybody's talking about that's the best investment, then it's just like, hey, that sounds like something I want to do. But imagine if somebody walked you through the exact step that you need. Let's call it 100 grand or 50 grand. Okay, well, what do I got to do to get 50 grand? Well, maybe you go find furniture that's been thrown away on the trash because you like to woodwork, and you start fixing that furniture. And if you get $100 from it, okay, I got to do this 500 times. Okay, 500 times. If I do it once every other day, that's going to take me 2.5 years. Breaking it down into bite-sized chunks makes that freaking goal more attainable, and not some kind of big, huge Mount Everest to climb. It's one deal. It's one piece of furniture. It's one piece of art that you sold that sells. And maybe it's $20 or $50. It doesn't matter. If you know the number you need, you know what you can do that you love, then you know exactly how many times you got to do it over and over to get to that goal. That's it. Same thing with mortgage. That's why I have that content about the Antique Curb Show, where I was talking about finding furniture on the road and flipping it, because I want to help people that are on disability income see a path on how to get money. Because I found out that people on disability can only have $2,000 in their bank, which really pissed me off when I found that out. I'm like, how the heck are they supposed to plan for any emergencies? If you can only have $2,000 in the bank, how do you buy a house? Yes, you can buy one if you're on disability income, but how do you accumulate the money? And I showed a path. I'm like, okay, if you got to find an area where you can buy in this price point, which it's on my profile, and go find furniture, because there's so many people on this app that flip furniture. Do it slow. You don't have to spend a bunch of money. Go get some sandpaper, a couple bucks, a can of paint. In Home Depot, usually they have the section where it's rejected paint, where people don't like the color. Get a can of paint for like $5. Paint it, go. Or just sand it and go. Or just get the free stuff and sell it for $20. And you can have people pick it up from you, so you don't have to have a car. But there's always a plan. There's always a path. You just got to talk to somebody who's going to help you see it and go from there. Again, this is only a market update. To close and finish, the bond market is doing amazing. We're up 29 basis points again. We've recovered 250 basis points over the last 30, 60 days. It's amazing. Rates are going to continue to come down. The Fed spoke today. Powell, he talked about that they have to change their policy on monetary tightening, hinting that they're going to do the cut like we have been talking about on the 18th of September. This is going to mean that rates are going to continue to go down as we finish the third quarter and enter the fourth quarter. Talked about this and told people this was coming back in 2023 when I looked at all the report data and the inflation data, knowing that every month as the new reports come out, it's replacing the report data from the year before, because it's always a rolling 12 months, meaning the inflation average comes down. It's perfect. We're also going to election season, and that is always a time where no matter which side, they want to look good going into that period of time. It's going to be awesome. It's going to be wild. Reach out, send me a thing, whatever it is on this thing, what on my profile calendar invite. It's all there. It's linked. I'm not a tech wizard, so I don't know the terms. If you have questions, reach out. Otherwise, I'll be on live next week. I'm going to try to be live every day of the week to get market updates because of how important this is right now and how many people are getting freaking hoodwinked by aggressive lenders who are zero integrity. Talk to you soon.